Grain futures started the week with a generally positive tone, but spring wheat futures stayed close to unchanged late in the session. Corn and soy complex futures had new demand to factor into prices. Lean hog futures closed at the highest level since this spring. And live cattle futures are looking for reasons to ignore strength in the beef market.
Live with all broadcasting members in attendance via Farm Journal broadcast. This is AgriTalk. This afternoon we'll chat with Randy Martinson from Martinson Ag Risk Management. Later, Kerry Artak from Artak Advisory and WickedStocks.com. And directly following the news, Jack Scoville from the Price Futures Group. I'm handsome newsman Davis Michelson. Now, here's the host of AgriTalk, Chip Flory.
All right. Hey, thank you so much, and welcome to AgriTalk. Davis, how are you, buddy? Everything okay?
Let me tell you what happened, all right? I'm getting ready to do the show this morning, coming right up to it, you know, prepping and everything. I'm set, and I look out the front window there. We got these terraces right down by the sidewalk. There's a guy sitting there. He looked kind of down and out. So I thought, you know what? Let's help a guy out. I took him a Coke. And he stands up, I hand him a Coca-Cola, and he pops the top and drinks it in one drink. No. He turns around without saying a word and looks back and throws me this jersey.
Throws you a jersey? Really?
And he disappeared. And then he disappeared.
Really?
Number 75 from the Steelers. I don't know what to make of it.
I was going to say, was it a number 75 on that jersey?
It was. It was.
Wow.
He said, "Here you go, kid." And he was gone.
Unbelievable.
And so I needed some time to recover.
Well, you just need a little time to take that in, to digest it, you know. And speaking of time to recover and handle, I meant to say it this morning, failed to do so, and I will say it right now. Thank you to everyone out there that felt that it was necessary to check on my well-being on Saturday night as the Cyclones struggled to a win against the University of Central Florida to stay undefeated on the year at 7-0. So everybody that reached out on Twitter, Bob, Sean, all you guys, thank you. Thank you very much for doing that. I appreciate it. My well-being was in question there for a while during that game. Yeah.
You seem fine now, though.
Well, it's amazing what a win will do for you. Dude, it's 80 degrees.
It looks like they should be able to run the table with no problem.
Oh, no problem thing? No problem thing is, do you know college football, Big Apple, Joe?
No.
I think you do. I mean, is it ever easy to run the table?
Oh, man, as long as you don't have Northern Illinois on your schedule, yeah.
Yeah, right. That's exactly right. Yeah, no, we've got some tough games that are coming up. Texas Tech, BYU. There's some tough games left on the schedule, no doubt about it. Well, and
sounds
others.
Like you need a nice cold Coca-Cola, maybe.
I maybe do. It is. You know why? Because it's 80 degrees here in Northeast Iowa on October 21st.
79 degrees here in the southern tropics right now.
Wow.
79,
baby. Welcome to the role reversals.
Woo.
Welcome to
I need my slippers.
So. All right, let's get to the news.
I'm going to have to go fast. Export inspections of wheat weekend at October 17 total just over 268,000 metric tons, well short of expectations. Wheat futures generally followed corn and soybean prices to the upside, but gains were capped by rains in the U.S. central and southern plains. December soft red winter wheat futures opened steady and rallied despite resistance at 580 and then fell back to close below the opening range, but the contract did stay above support at Friday's low of 570 and a quarter. Today, December HRW wheat futures a penny and a half higher at 582 and a quarter. December soft red wheat up a half penny, 572 and a quarter. December spring wheat closed at 614. That's down 2.5 cents, Chip.
Yeah, wheat was a weight on the rest of the grain markets today.
Export inspections of corn weekend at October 17, 1 million metric tons. That was at the high end of trade expectations. USDA this morning also announced the sale of 170,000 metric tons to Mexico and 130,000 metric tons of U.S. corn for delivery to South Korea, both for delivery in the current marketing year. That improved demand helped corn trade higher, but gains were limited by the quick harvest pace in the U.S. and improved moisture in Brazil for the first crop corn. December corn futures opened on Friday's low and closed on Friday's high, posting an outside trading day. December corn futures today 4 3/4 higher, 409 1/2. March corn up 4 1/4 to 423 1/4. July corn futures closed at 434 3/4, up 3 1/2 cents. Chip.
Yeah, this demand thing is real, Davis.
Yeah.
More corn sold this morning. We had good export inspections. Our export sales week last week was very good. It's going to be good again this week. It feels real. We'll talk with Randy about it and what it might mean for us going forward.
Well, let's talk about the beaners, too. Export inspections of soybeans week ended October 10 totaled 2.43 million metric tons. That was in line with lofty pre-report trade expectations. USDA this morning also announced the sale of 380,000 metric tons of beans for delivery to unknown destinations in the current marketing year. Improved rainfall in Brazil's northern production areas and a forecast calling for more consistent rainfall stalled buying interest in beans. Bean meal and bean oil participated in the general commodity strength, with bean oil finding support from the solid rally in crude. November beans opened near session lows, spiked support at Friday's low, and then rallied to close high range, but still, chart watchers expect resistance at Friday's high, 985 1/2. Novi beans 11 cents higher, 981. Jan up 7, 989 3/4. March beans closed at 1002. That's up 5 3/4 cents. Chip.
Yeah, December soybean meal today up 270. December bean oil up 57 points. Hey, we'll get to the rest of the markets after we have a conversation here with Jack Scoville, Price Futures Group. How you doing, Jack?
I'm doing great. Nice way to start the week off here.
It was.
It was. And I think kind of went against most people's thought process. Most people thinking we'd open a little bit lower because of the great weather we're having for harvest. But apparently farmers are sitting on tractors and harvesters and not really selling anything because the nearbys, both corn and soybeans, led the way higher. So really good sign.
Yeah. The beans in particular, Jack, with the way the bull spreads work today, and I mean, like down the board, it really did get me thinking for the first time that, you know what, maybe this bean crop isn't going to be everything that we thought it was going to be. Is that thought in your mind?
Well, it's been in my mind, beans and corn both. I hear mixed things out there. I know that the rhetoric has been for very strong yields of both corn and soybeans that I'm honestly not necessarily picking up from my clients. I'm not picking up bad crops. I'm just not picking up record crops. And, you need record crops if you're going to have record production. So I'm kind of questioning that. Doesn't mean that we're going to have a bad crop, however. I think we're going to have a good crop, perhaps a very good crop. I just don't think it. I think these record yield reports are, I don't know. I have trouble with them.
Yeah, here we are. We're getting into the last third of the corn harvest, something like that. And there's still a question mark on it. I'm with you, Jack. And beans are 80% harvested, and we still got some question marks over that. Good perspective, man. Thank you so much. We'll talk to you later.
Okay, great.
All right, Jack Scoville, Price Futures Group. We got Randy Martinson, Martinson Ag Risk Management, up next.
Knowledge is power. We're here to charge your batteries. AgriTalk.
Welcome back to AgriTalk. I'm Chip. Glad that you are with us on this Monday afternoon. Davis Michelson is here as well. We're going to get right to a conversation with Randy Martinson. But first, Davis, let's go ahead and finish up those markets.
Yeah, well, I've got December cotton 121 points higher today at 72.20. Just some quick hits on the livestocks here. Heavyweight choice graded boxed beef futures rallied another $1.42 this morning. Slow movement, though. Puts the beef market at 322.07 this morning, Chip. Beef market strength helps cash cattle trade higher for 6 straight weeks, but traders are running out of energy to break resistance at 187.50 in the D's. Those diesel live cattle 50 cents lower, 186.82.5. November feeder futures $1 lower today, 246.60. And on the snout side, D's hogs open slightly lower, spiked support at 77.50, and then recovered to close high range, highest level since April 24, buddy. December hogs 45 cents higher, all told, 78.27.5. The February contract up 40, 82.25, buddy.
All right. Thank you very much, Davis. Let's bring him in. Randy Martinson, Ag Risk Management. Randy, it is good to talk to you again. How are you?
I'm doing great. How's Chip?
No, doing just fine, just fine. I was sharing with the guys during the break there that I'm doing my part for Beef Demand. There's a couple of ribeyes that are thawing on the counter as we speak. They'll find the grill tonight. Everybody seems to be buying beef, Randy. That 322, whatever it is, in the heavyweight choice graded box beef market. My gosh, and we couldn't get cattle to close higher today. I was surprised by that.
Well, there was, some of the leading September economic indicators were a little bit less than expected here this morning. So I think that led to it. But I kind of agree with what Davis was saying. Cattle are starting to look a little tired right now. They've had a good run. They might need a little bit of a retracement to kind of clean things up a little bit and then kind of get the energy to maybe try to test those summer highs.
Yeah. It's unbelievable the way that market has been pounding on resistance at that 187.50 in the D's. Good grief. I don't know if a single close over that 187.50 is going to open the door to more gains or if it's going to bring the sellers rushing into that market, Randy.
That's a good point. And right now I would think if it could close above it, I think that, or trade above it, I think it would hit some buy stops and would start to see a little bit more surge higher. And we could then see this thing try to push a little earlier than expected. But, right now I've been expecting because of the bigger runs that we're seeing at auction rings, cash, the feeder cattle are selling very good. So that's the other part is that the calves going into the feedlots right now are selling at some really nice prices.
Yeah. When you look at a feeder cattle futures market with the November at 246.60 and it's a negative basis in that feeder cattle trade, and not just a little of a negative basis, is it? I mean, the 7-weight black steers are selling quite a bit above that, right?
They are. I mean, I watched some sales last week where I'm looking at trying to sell some of my calves here maybe in the next couple of weeks. And yeah, I've been very impressed with the prices. And yeah, they're, like you said, it's not just a little bit above futures. They're quite a bit above futures.
Yeah. Yeah. I don't even know what that means for trying to manage the risk in these markets when you're working with a basis like we've got in the feeder cattle. I mean, is it a situation where you want to build a price floor under both the fats and the feeders?
I think so. I mean, we've got some, profitability, especially with the lower costs, with the lower corn, lower feed right now. We've got plenty of feed, so I think that's why it's helping with the demand, which is helping to hold the cash up. But yeah, I mean, I would still put floors underneath these markets. I like the idea of using, short-term, LRP programs work really nice to put a floor underneath. Puts work pretty good to do it. Maybe some of those, don't know if I'd want to take the risk of selling futures unless you have to go out next year to sell. But I do think putting a floor is not a bad idea.
Randy, and it's probably not a bad idea if for no other reason than to protect against what you started talking about. A slowdown in the economy and a potential slowdown in beef demand.
Exactly. And we've had, beef demand has been good, but we start to see, a little bit more of a slowdown. Let's say the Fed doesn't lower interest rates in November like everybody's expecting. They leave them static. We continue to see the dollar run and our exports start to slow down a little bit. All that could slow down the demand. We could even see packers slow down their chain speeds again, and all that could create a little bit of backup as far as beef is concerned, which could drop our prices. So, yeah, putting the floor underneath and locking in profits is never a bad thing.
Yeah, that's right. That's right. Okay, any thoughts on hogs in here, Randy? Are you following them?
Follow them a little bit, now I know enough to make me dangerous on the hog side, but I think that also is we've seen some good demand. And it does look like if you look at the last Hogs and Pigs report, once we get some of these heavier weight ones through, because we showed the bigger numbers for the 180 and above weights, once we get those moved through, it looks like we might see a little bit lower numbers, and I think that's helping to support.
Okay. All right. I don't know. I don't have the same feeling about getting the floor built on hogs as I do for cattle.
I would agree 100% with you on that one. I mean,
Okay.
You look at where the hogs kind of where the previous months went off, where June went off, and I mean, they were up quite a bit higher than where we are now. So I think that also we're seeing some value trying to be built back into the hog market.
Yep. Okay. All right. How's things going up there around Fargo? Are guys looking for a break from harvest?
Yeah, I think so. I mean, it's just like everywhere. Like everybody's been talking is that it's been warm, it's been dry. Yeah, you've been able to just go right from the beans to the corn. The trouble is, though, we're actually the crop is coming off way too dry in a lot of places. The beans at the end were coming off at about 8%. Corn right now, which I never this spring with our poor planting conditions would have bet that we would have been combining corn on October 10th at 13% moisture.
Oh, it's amazing how that happened. And I mean, you got to start. There's a difference between biological yield and harvested yield. And when it gets that dry, you start to cut into your harvested yield. It's through some cracking and some fines and just you're not weighing as much water. I don't know if it's going to show up in the final numbers or not, Randy.
I think it will at some point. The trouble is, when will it? And then we normally see USDA kind of push this back maybe a year out before they finally realize that maybe the test weights aren't there, the moisture wasn't there, and see the adjustments. But I mean, I can echo what Jack's saying. I think what he was saying just previous before he came on that none of my guys are saying that there's some good yields out there, but they're not monster yields. Up here in the northern plains and the northern Minnesota and South Dakota, we're seeing good yields, but we're not seeing those record ones. I think once we finish all the adding, when we start subtracting some of the drowned outs out of these fields, yields are dropping quite a bit.
Yeah. Is it showing up in your basis up there, Randy? Is it falling apart during harvest, or is it holding in there?
Well, it's holding in fairly decent. When you look at what our 5-year average is for basis, we're running at about that right now. I know corn is like 60, 65, which isn't bad now. So, but a lot of the corn, because guys had old crop left over, so the bins are getting full right now. Guys are looking at either piling on the ground or bags or selling it to the elevator. So some is starting to move towards the elevator, but it's not taking the basis down as bad as what you would expect.
Right. Right. So, in other words, you're still looking at the futures market more than anything else for your pricing signals. Is that a fair statement?
Fair statement, yeah. Telling guys that if you've got product that you need to move, just so you can have room to take it to the elevator and maybe look at locking basis, because we wouldn't expect it to get much wider, but, take advantage of it. At least then you can take it to the elevator and deliver it if you need to, and then give yourself a little more time on the future side before you lock that in.
Yeah. Yep. Well, and the other thing that it does is it gives you an opportunity that if you want to make the cash sale and turn around and re-own it on paper, it makes it easier to do that. Correct?
Correct. It does. And, there's going to be some year end that needs to be done, for selling more grain or whatever, so this will help put guys in that position to be able to do it. Like you were mentioning, the demand is extremely strong on corn, and that's a little bit leads us to be a little more optimistic on corn price going forward, a little less maybe on soybeans. So, I think that corn demand has just been phenomenal.
Yeah. Yep. Well, we are going to talk a little bit more about that corn demand and what it might mean for our markets going forward. We're going to talk about South America. China, where does China fit in this whole mix when it comes to demand? And then I'm going to ask Randy. I don't know if I'm going to get an answer or not. I always give guys an opportunity to beg off of this one, but what about the elections? any impact on prices or the markets from the election fallout. We'll talk about that next.
Let's go to the markets page at profarmer.com and check today's closes, where December HRW wheat futures were a penny and a half higher at $5.82 1/4. December soft red wheat up 1/2 cent to $5.72 1/4. December corn futures 4 3/4 cents higher today at $4.09 1/2. March corn up 4 1/4 cents to $4.23 1/4. November soybean futures 11 cents higher at $9.81. January beans up 7 cents to $9.89 3/4. December cotton today was 121 points higher at $72.20. On your livestocks, December fat cattle were 50 cents lower, 186.82 1/2. November feeder futures $1 lower at 246.60. And December lean hogs 45 cents higher on the day at 78.27 1/2. Get more market news every market day. Just visit tryprofarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. The chickens have come home to roost. Find out whose fence they're perched on today on AgriTalk. You're such a good guy, dude. I appreciate Chip Flory. I'm just going to say that live on the radio right now. I appreciate you, brother. Yeah, you're good stuff all day long.
I appreciate you. Oh, my gosh. See? Confusion. I don't like it.
Clearing up the clarity. Like it sticks in your craw when there's not clarity. Yeah.
That's right. That's right. Mm-hmm. Welcome back. We're in the middle of a conversation with Randy Martinson Ag Risk Management up at Fargo. Okay, Randy, talk to me. You mentioned the demand for corn in particular, how it has definitely improved. It is providing support for corn. Is the market reflecting that increase in demand like you think it should?
Yes and no. I mean, I think the fact that we're being able to hold above that $4, support line is certainly, I mean, I think it's helping to do that. I don't think we're pricing it in as much as we probably should be. I think, we could see this if the demand continues to come in strong. And I still think, we need to see feed demand increase because we're feeding the cattle longer. We're putting on heavier weights. There's more cattle in the feedlots than anticipated. So I think that, there's other adjustments that need to come from USDA going forward on the demand side. So, yeah, I do think that it's going to continue to help support corn. And I don't think we'll see any stocks estimate of above $2 billion, which I think will be friendly this year for corn.
Okay. Yeah, it would be. It would be. Now, I'm interested in let's add another one to corn then. The margins on ethanol have been pretty doggone good, right?
Yes, they have been. And we've been seeing, last month, I believe, or last week, we saw 2 weeks ago, we saw a little bit of a drop, but then all of a sudden a surge higher. I think that, gas demand did the same thing. So I think if we can encourage, a little bit more driving, then our demand is going to continue to be fairly strong. At least the use of ethanol will be strong. But yeah, the margins are there, and it's definitely the ethanol plants are trying to push it out.
Yep. Okay. So you mentioned timing earlier on when we might, if we're going to see the dry corn have an impact on yield, if we're going to see some of the issues in that corn harvest show up at some point, the question is when. We could have to wait a year until after the September quarterly grain stocks report. So the timing on this feed number that you mentioned, it seems like we got to wait until after a grain stocks report there too. So what, we'd have to wait until the end of January to get the DS1 number?
Or it might even take until the March one to get it, because then at least we'll get through most of the winter and we'll see the increase. So I think it'll be the March quarterly grain stocks estimate that'll show the increase, and that will help give the corn the next demand boost that we're looking for.
Yeah, just in time to give Brazil a higher price for corn as they harvest theirs. Jeez.
Exactly. Timing is always important, and that is one of the worst timings. That's right. So.
Oh man, no, I think you're right. I think you're right on this, and it's going to take some time for it to show up. And then we always get some indication from cattlemen or hog producers, how well this new crop is feeding. I haven't heard anything yet, but it will be interesting to see how this year's crop does feed, and whether it's going to take a little bit more in the tank to get the same results or not. Are you hearing anything on that yet?
I have not heard anything on it yet, but you're right. I mean, the quality of the corn makes a big impact on, the conversion to feed, how many pounds of gain you're going to get. And I think that is going to be very important going forward. And just how bad our winter is. If we look at getting some cold temperatures and below normal temps, which, I'm a believer of averages. We've been seeing a lot higher average temperatures than normal. Even up here in the north, we're in the 70s today, beautiful sunshine. We're 20 degrees above normal. And if you believe in averages, that means we've got to see some cool weather coming in pretty soon.
Yep. At some point, I think people are going to have to pay attention to the fact that droughts start in the fall, not in the spring, Randy.
And up here in the north, we love them in the wintertime because that means less snow. But that also means that we could have a spring like we did this year, where last year we had a beautiful winter, and then all of a sudden we get hit with the moisture, and it delays us, and we see more drownouts.
Yeah. It's just been absolutely crazy. Makes me think that there's still plenty of weather volatility coming our way in the year ahead. Like you said, a dry, warm winter last year, and then you guys, spring of the year, had enough rain that we had the highest July crest on the Mississippi that we've ever seen. It's just a crazy scenario that we've been going through. So we need to prepare for that. Talk to me about South America. What's factored in for South America? Because now, and let me give you some parameters. USDA for Brazilian beans at 169 million metric tons. For the first time in quite some time, Randy, I've been hearing more guys say, you know what, I think maybe USDA pushed a little too hard on that number. What's your thoughts?
I think they're pushing too hard on it because, a little bit, they're delayed planting. They're not looking at their optimal planting right now, or at least it's going to be tough for them to get a majority of the beans put in optimal timing. And the guys I've talked to down there said to be able to do that, they'd have to plant a record pace of soybeans on a weekly basis to be able to make that target. Well, it's very unlikely that'll happen. So I would expect that we're going to see a little bit lower yields potential. And I don't think we're going to see all those acres get planted because their margins have been tightened up and they're seeing a little bit of financial issues as well. So I think the acres might be down a little bit this year as well.
Yeah. Yeah, and if the corn doesn't start to give them a better profit opportunity, they may just that double crop corn, a chunk of it might not get planted.
Exactly, and that's a higher crop. I mean, it's like here, it's a higher cost crop to put in. The inputs are higher, and if the beans aren't harvested, quick enough, and it won't give them enough time to be able to get the corn planted, to give it a time to be able to get to maturity before their weather starts to turn the direction. So I think there's a lot of more unanswered questions down there than there are answered ones. And then you throw Argentina in the mix, which is dry and getting drier.
Yeah. Okay. All right. That is something that will become a bigger issue for the bean market. Oh, geez. Well, in the corn market, we probably got to wait another 3 or 4 weeks, don't we?
Yeah, we do. We got to get a little deeper into the planting and see how things are emerging and see how things are going. But, it'll take at least a good 4 weeks to possibly even 6 weeks before we see a lot develop out of any production issue down there.
Okay. All right. So these elections, is there anything that we need to be aware of, be thinking about as we get closer to Election Day, as it might influence what's going on in the ag markets?
Well, markets don't like uncertainty. They seem to not they react adversely to adversity. So, I mean, that's one thing that but we kind of already know what both parties or which both candidates are going to kind of bring to the table, because we're experiencing one with the Biden administration now. We kind of know what the Trump administration is like. We know we'll see less regulations under the Trump administration. We might see a little bit of issues as far as trade, deals with China, for example. But now, the Harris administration, I think, will be a lot different. And I don't know if it'll be as friendly to some of our renewables like we might see in the other one.
Interesting. Okay, so we got that into the conversation. So that's all in the hopper. Now, throw this demand, this supply, everything into the hopper all together. What does it mean for your marketing ideas here, Randy? What do you want guys thinking about?
Well, one, I think the big thing is China's been slowly kind of removing themselves from our marketplace. I mean, we went from being a 2/3 supplier of their needs, their product for their soybeans and other egg products, down to about 1/3 now. So we've seen it slowly moving away from us and into Brazil. I don't see that changing going forward. I think that China knows they need to get from different areas, because they can't get them all from one. They just logistically can't happen. But I don't think we're going to see any big increase from demand from China. But we do have to watch where it's coming from other countries, and then to make sure we have good relations with them. And I think that's the big thing moving forward.
Okay. All right. Very cool. Very cool. How's the pheasant population look up your way this year?
Not too bad. Starting to see them a little bit more around now that some of the cover's starting to get taken off, some of the crop getting harvested. So it looks like it should be average year for us up here for pheasants.
Good. Well, average year for you guys is a pretty doggone good year compared to Northeast Iowa, Randy. So that's a good deal. Good deal. So real quick. You mentioned you got some calves to sell. Randy, I didn't even realize you had a cow herd.
Yes, I do run a small cow herd, with help of my brother and a nephew. Yeah. So, but yeah, I can't get the dirt out of the fingernails.
Yeah, good for you. Good for you. Randy, I always enjoy these conversations, man. Thank you so much.
Yep, thank you.
All right, Randy Martinson Ag Risk Management up there in Fargo. All right, when we come back, it's going to be time to take a look at what's going on the charts. Kerry Artak Advisory, and WickedStocks.com coming up next.
We've cleared the schedule for you. Give us a call at 855-482-5524 and join the conversation.
Welcome back. I'm Chip. Glad you're with us. Great conversation there with Randy Martinson Ag Risk Management out of Fargo. A lot of good things to think about and keep in mind in that conversation that we had with Randy. All right, it's Monday afternoon. That means it's time for a conversation with Kerry Artak Advisory. How you doing, Kerry?
I'm doing fantastic, Chip. How are you?
I'm doing real good. Okay, don't forget, you can get a free trial of Artak Advisory. Just go to artakadvisory.com, ARTAC advisory.com. And, Kerry, tell us about Wicked Stocks again.
Wicked Stocks is a stock advisory service that I started a few years ago with my two now kind of mid to upper 20-something kids. As they came out of school, we provide 2 stock picks a week that cater to kind of the 3 to 5 week out to the 3 to 5 month position trader. We also do daily SPY, daily triple Q analysis, weekly Apple stock. We do a lot of stuff for a subscription, and we offer a 5-day free trial up front if you go to wickedstocks.com.
Perfect. Okay, get us started with these corn. What do you got?
December corn, it's worth updating because we're so close still to this long-term one-year channel top that held the May highs. The May, it was in the 450s. I think I misspoke last week when I said the low $5 area. It was around 455 even roughly in May when we tested it. Pushed through it just a little bit, never closed above it, and then we fell away to I think it was around 404. I think that was the August low, if I recall correctly. In any event, that channel top is now at around 420 half. Actually, it's at 416 and a quarter if you want the exact number, but I'm using 420 half as the 1% violation threshold above 416 and a quarter. When you've got long-term line studies and technical analysis, if you close just above it, I mean, yes, it's a buy signal if we were to close at 416.5 or 416.75, but it really is that full 1% that gives it a greater degree of reliability. So if we close Friday, December 24 corn at 420 half or higher, we close 409 half today. So we're about a dime away from that. If we can rally into later week, close at 420 half or higher, I see meaningful recovery through the rest of the year and into winter trade. 459 even then likely by the end of the year, and 505 even as we move into late winter, early spring. Until then, we remain locked in this bear market by many counts. The first and foremost is the 420 half level, and holding below it, 378 even is likely by December expiration. And the broader corn futures market, we're talking now the March 25 contract could continue south into the mid 340s before this is over into next spring. Holding below 420 half. On to January feeder cattle. Last week was November. We've rolled to January, and I'm just updating here because we have a longer-term buy signal about a month ago that remains in effect above 241.37. That actually allows a retest of a 30-year channel top at around 268 and a quarter. We tested that twice actually in the last year when it was in the lower 260s. It's climbing very gradually, and I see that as a clear-cut objective, possibly in reach by January expiration if we can close above 247 even at the end of this week. That is kind of a midterm resistance. The way I'm seeing this right now is kind of a battle, if you will, between 241.37 floor of support, long-term support, and 247 even midterm resistance. Odds favor a settlement above 247 even, and if we get that in the next couple of weeks, then I see the low to upper 260s, 263 half all the way up to 268 even is just loaded with all kinds of long-term resistance levels that would be a 2 to 3 month objective. In other words, quite possibly by January expiration, if we close above 247 even, that 263 half to 268 roughly area in reach by January expiration, where the broader feeder cattle market could top out once again through all of next year. Downside, closing below 241.37 is a sign of weakness. 225 even in reach within about 2 to 3 months, and we could, as we continue into spring, summer of next year, fall all the way south to 209 half. But I'm telling my subscribers to also watch the live cattle market. December live cattle would need to throw off a long-term sell signal, and I don't actually have that number in front of me. My apologies. Anyway, final market is a stock, a Micron Technology. That's symbol MU, Mary University. We closed today around 108.53. We're very close to a longer-term buy signal that within 3 to 5 months could yield a 30-40% return, and that would be a weekly settlement Friday above 111.15. There's a channel top there that's about a 4-month channel structure. If we can close above 111.15 on Friday, I see 154 even as a likely 3 to 5 month target. On the way up, 129.5 would be expected within about 1 to 2 months, but that's a pretty solid rally for this Boise headquartered company. Until then, holding below 111.15 does allow this market to fall back into what I would call the mid-80s, 84.12 to 86.38 over the next 2 to 3 months. I don't have a sell signal in play, but we are testing a pretty significant overhead price resistance level, and when that occurs, the market quite susceptible to bearish rotation as we would continue through the rest of the year. That's pretty much all I've got, Chip.
Yeah, it seems like a lot of the stocks are testing some of those important highs that have been posted with the way that the overall index is performing. Hey, good stuff, Kerry. Thank you so much. Appreciate it, man.
Thank you, sir. You have a great day.
You bet. Kerry Artak, Artak Advisory, and wickedstocks.com. All right, National Weather Service 6 to 10-day outlook. Davis, this is for October 27th through the 31st. Can you believe that? At the end of the month.
Trick-or-treat weather.
Above normal temperatures, with the highest odds of above normal temperatures right over the heart of the Corn Belt and right down into central Texas. And above normal precipitation expected over most of the Corn Belt. The exception, southwest Indiana and Ohio in that outlook. Every place else in the Corn Belt is looking at above normal precipitation, at least in the outlook here. The 8 to 14 day, it's basically the same thing. We're looking at above normal temperatures across the entire Corn Belt. We do have some cooler temperatures starting to push in from the west, but we've got above normal precipitation expected over most of the Corn Belt. As a matter of fact, it pushes further to the east to include all of Indiana and western Ohio and all of Michigan in that above normal precip forecast as well. So, Davis, I don't know. I'll believe it when I see it if these rains are actually going to show up or not.
Do you think me and Joe would mind if I wore his jersey for a Halloween costume?
I think he would be so honored if you would do just that. Thank you so much for listening today. Come back tomorrow morning. We're going to have a conversation with Brian Whittekins from WRDN in Durand, Wisconsin.